Hi, this is Dan Collins joining you once again from Traders Expo, New York. Joining me is Dan Keegan of optionsthinker.com.
That's right.
Nice to have you here, Dan. We started talking about volatility after years of shrinking volatility through 2017. Volatility had returned to the market. How do options traders have to kind of think of that in this kind of new world of return volatility?
Most option traders are rejoicing because 2016 and 2017, when the time value in the option premium, which is the implied volatility options, sunk as low as it did, then it was pretty much impossible to make money whether you were short premium or long premium, because when the premiums get so low, you can only make so much amount of money, and if you increase your size when the volatility does increase, then you're dead. So. Yeah,
and that's where the risk is, that you want to put on bigger positions because of the lack of volatility.
Exactly, and that just judgment day will arrive at some point. So this, a lot of people with this big volatility, like Christmas Eve, they bemoan it and say, "Oh, this is awful." You should be rejoicing. Learn how to harvest that volatility.
Yeah.
So.
Well, but that's another deal. Increased volatility also increases risk. So you have to think about positions kind of new in this world, don't you?
You do. But what you do is you just line up one option against another and do it so that and the skew, of course, where the out of the money puts are way higher than the out of the money calls. Different positions like that you can take advantage of.
Okay, well, Dan, you've been educating traders on how to trade options for a long time. What would you think of maybe the 1-2 things that a lot of new retail traders kind of miss, and what they really need to learn before they enter trading more enthusiastically, let's say?
Well, the number one fault of people who get into trading options is they're always thinking directionally. Like, the only way I can make money if I buy this call and it moves in my direction, or if I buy this put and it goes down and I make money. They're ignoring the time value that's in the option. So they might buy a call, the stock goes up and they don't make any money, they're scratching their heads, how did that happen? You know, you have to learn how to buy one where you have the time value, and then sell something against it where you're reducing that time value exposure.
Yeah, and they're precise instruments, so people need to understand that when they make a trade.
That's a great thing. It defines your risk. Now, obviously, you go from one cycle to the next, it makes it a little fuzzier, but it's still, you can define your risk better with options, much better than with stocks or futures where it's a binary outcome, it goes up or down. With options, there's like 50 different entrance doors and 100 different exit doors. So, you know, and that's just a saying. There's literally unlimited amounts.
Yeah, which is a great tool with options, but it also create a lot of risk if people don't understand how to use that.
Absolutely. If you don't know what you're doing, don't start trading because your odds are not going to be with you. But once you know how to trade, once you do, you're at a huge advantage. You got the wind at your back, and you can, instead of bemoaning the volatility, you're harvesting it. So.
Well, that's why they have to reach out to people like Dan Keegan and other options educators we have at Traders Expo, because options are great tools, but if you're not sure what you're doing, you could lose money really quickly, and there's a lot of great education out there. This has been Dan Collins coming to you live from Traders Expo, New York. We're going to take a quick break and be back with Dan Keegan.